Welcome to the Good Success Podcast. We have an amazing show scheduled for you today, but before we get started, let's have a word from our sponsors. Radius Renovation Group is a full-service construction management solution for investors of single-family and small multifamily investors in 25 states. Whether you own one property or hundreds in different states, the goal is to be your one-stop shop for all your construction needs, to increase property values, and to give you a positive and profitable outcome. Using their 8-step process, Radius will walk the project, complete a line-by-line scope of work and estimate, schedule work with licensed and Radius-certified contractors, manage the project and contractors, pay the contractors as work is completed, provide quality control throughout the project, and when the project is complete, do a final inspection. Clients are provided with login access to Radius's cloud-based project management platform to view work schedules and updated photos of each job. There is even the ability to directly message the project manager. Radius only works with real estate investors, so they speak your language and understand your needs, from project timing to investor-friendly pricing. If you're an investor who is done trying to manage contractors and rehabs on your own, it might be time to consider having Radius as your partner. To put their expertise to work for you today, visit the Radius website at www.radiusreno.com or call them right now at 417-730-9777. And now, back to the Good Success Podcast.
If you don't verbally state your goals and tell everybody what your goal is, it's going to be really hard to get there. It's one thing to write it down and post it on your wall, but talk about it with people and you'd be surprised how people will rally around you to try to help you achieve what you want to achieve in life.
Welcome back to the Good Success Podcast. I'm your host, Josh Culler. Tom Wilson, president of Good Success, right next to me.
That's me.
How you doing, buddy?
Pretty good. How you doing?
Good. We got the same shirts on.
Kind of, yeah. Same shirts. Yep.
Same but different.
Same but different. Old school.
You have
newer.
Yeah, the old school, and then
we actually have a newer one that's showing up today.
There's another newer one.
It's just a hair variation, not much, but it's
Is
really
it better?
Close. I don't know. It's the same
We'll
material
see.
as this. It's a little different color.
Okay.
But I think we actually went back
that?
to the correct orange. I think this orange kind of got a little.
Yeah, that
red on
orange is
us.
a little bit brighter,
Yeah.
so it works. It's all good.
Yep.
Anyway, so we're excited to have a awesome guest on the show who we've had on the show before, Mr. Noel Christopher. I don't think you're in Steamboat, Colorado right now, though, right?
Yes,
You
I
are?
am.
You are there. Okay, awesome. Well, cool. But he's with Renters Warehouse, which, if you guys don't know about Renters Warehouse, just go look them up, and they have all kinds of awesome content that's out there. Most of it being Noel, so he's got a lot going on. So he's actually a part of Think Realty in the leadership circle as well. And I know that's kind of where we got looped in with them. So it's exciting to have Noel on the show today. We got some great stuff he's going to talk about. And it's not all going to be stuff that you guys maybe think that we're going to talk about with single family rentals, which we're going to have him talk about that. But we're going to be pretty diverse in this conversation today. But Noel, it's awesome to have you on the show. Thank you for taking the time to be on today.
Oh, I'm happy to be here.
Awesome. So before we get into it, you guys know the routine. If you haven't already, make sure you have subscribed to the podcast, the Good Success Podcast. However you're listening, if you're listening right now and you're not subscribed already, hit pause, go back out, hit subscribe, and then hit play again. So make sure you do that.
And there's going to be something that's said on this show that you think somebody else should hear.
That's
so
right.
Tag those people.
That's right.
And say, hey, you need to hear what Noel has to say.
That's right. Absolutely. Make it happen. Collaboration. There you go. Tag people. And if you're on Apple Podcasts, make sure you head over there. Leave us a 5-star review if you haven't already. We would much appreciate that. Or you could just download the official Good Success app on the Apple App Store or the Google Play Store for Android phones and listen to the podcast there. It's 10 times easier. And the search functionality is incredible. So if you're looking for podcasts that we've had, guests like Noel on the show, and you're looking for single-family rentals, just type in single-family rentals. And every episode that we have that comes up, it scrapes not just the titles, but also the description. So you guys can find those episodes a lot easier. And then the Good Success Mastermind, the next event is coming up, and it's right here in our backyard. Yep. So Tom, talk about the Mastermind.
Indiana, August 5, 6, and 7, 7, 8, 9. Come for 3 days and network with the fewer betters. And it's not just about helping your business, although it is, but it's also about helping you have the right mindset about your business in your life and how to have the right kind of success. And a lot of the people that are in the mastermind, I think they already have the right kind of success. And if they don't, they're searching for it, or they're seeking for it. They're going down that path. And to me, I want to put myself in a room full of successful entrepreneurs that aren't just going to tell me like, I want to do this to make a bunch of money or to retire and sit on a beach, but like have a purpose for why I do what I do. And Good Success is the purpose-driven mastermind. So if you want to check that out, go to goodsuccess.com/mastermind, fill out the application. I do want to make sure that there's some qualifications for you to be able to be in the mastermind. So we will make sure that we vet that. We probably say no to more people than we allow in to even come into the room. And we're changing around some of the things that we're doing. We're offering a lot more than we used to offer. We have the whole net profit workbook now that we're working on with each person. We have an accountability call every single month instead of just a kind of a phone call to get together. And we're really holding you accountable to what you say is important and asking you, hey, why didn't you get this stuff done? And that's what I think successful entrepreneurs need around them, is people that are going to hold them accountable to the things that they say they're going to do. So goodsuccess.com/mastermind, fill out the application there, and we hope to see you at the next event.
I have a question for you. Did you just make up a purpose-driven mastermind, like right on the spot, or is that something you've been thinking about?
Kind of both, but yeah, kind of both. That's pretty much where I'm going with this. So
okay, so that's like,
I love it.
That's going to be one of the marketing messages that you need to put on the website.
Yeah.
Purpose-driven mastermind. And then write a book, The Purpose-Driven Mastermind. Make the cover almost the same as A Purpose-Driven Life.
I don't want to copy
different.
stuff.
But it has good success branding, but it has the same feel to it, right? Anyway, so yeah, Good Success Mastermind, goodsuccess.com/mastermind. Fill out the application there, and we hope to see you at the August event right here in our backyard. And then we have the Community Go-Giver event, so we're actually recording this a week before the event. But I'm certain it went well, but this is airing afterwards. So tell us what people can expect for next year's event.
So next year's event, I have a ton of amazing speakers that are going to speak next year. I've got Al Williamson, who's going to talk about short-term rentals.
He's been on the show,
and he's been on the Good Success podcast. I've got Jerry, who not only is he a lender and one of our preferred lenders that we say for our turnkey rental properties, but he also has a son that has closed syndrome, and he's going to talk a little bit about that whole thing. We've got Kent Lacey, who will be back with Veterans Path Up. We've got Wendy Sweet, who will be back with Carolina Capital. So we got Jim Ingersoll, who has already told me that he's planning on coming back, and probably 4 or 5 more really good community go-givers. That's what I'm really looking for. I'm really looking to spotlight the people that are making a difference in their community. This year we had Roger Haywood, who talked. It just did an awesome, amazing job about how he's helping Gary, Indiana, and he's been doing this for 10 years, but he uses people that just got out of prison to help rehab his houses, and he's not just rehabilitating houses, but he's rehabilitating these people one man at a time, and he's really making a huge difference in the community by just helping like one person every single day to try to get them better, and then he's helping them get jobs, he's helping them do many different things. So
we need to get him on the podcast.
We do. He's a hard guy to
sure.
lasso, because he's actually out on the jobs working and
Gotcha.
swinging the hammer and making things happen from that way. But he's an awesome, cool dude, and just really excited about the movement that is the Community Go-Giver. Next year's event will be June 24, 25, and 26, and 100% of all ticket sales will go towards a charity or go towards somebody that's making a difference in their community. So I'm super excited about next year's event. We are looking for sponsors out there, so if you're looking to be able to sponsor a movement like this, talk to me and we can talk about sponsoring the Community Go-Giver for 2020. I'm looking for lunch sponsors and event sponsors as well. If you're an event sponsor, we'll give you an opportunity to speak as well at the event. So let us know if you guys are interested in that.
And those sponsors are pretty much to pay for the event, so you have the ability to donate.
Really,
that money.
that's why I'm changing this up. So we haven't really gone after sponsors for the events, but what I don't really want to make money on the event, but I do need the event to like not lose money. Right. So I'm trying to get to the point where at least if the sponsors cover the event, then all the money from all the ticket sales can go towards making a difference in the community.
Absolutely. That's incredible. So make sure you're following us on all of our social platforms in order to be up to date on the stuff that's going on for the Community Go-Giver event coming up next year. So keep an eye on that. All right, so let's get into the show today. I'm excited to have Noel Christopher on the show. He's been on the podcast before, but we're gonna talk about maybe some topics that we talked about before because it's been so long. But we're gonna get some new topics out of here. So,
well, I just like the fact that Noel is willing to call everybody's bluff when everybody keeps saying that like we're crashing right now, and I'm like, no, we're not. Like the data doesn't say so. So why are you saying so? Right, Noel?
Yeah. You know, Market Watch just put an article out today that I read last night. I read it at 11 o'clock at night, and I saved it for my LinkedIn show I'm going to be doing later on. Just when you read these articles that are the clickbait saying, you know, we've hit the bottom, and then halfway through the article, they go, well, but actually most people are saying we haven't. We're not in the same environment we were in 2007, 2006, and that in that time where we're over leveraged. It's a demand issue, and that's not going to cause a downturn. There's still affordability issues. There's still all those things, but it's those that are out there beating the drum of a housing crash are just, they're misinformed either intentionally or just being ignorant, in my opinion.
You know, it's funny to me because it's kind of like the news, right? You know, I posted this thing on Facebook a couple of weeks ago, and I said, like, what if the media just reported the news instead of trying to make up the news? Like, it's pretty much what's happening.
Yeah. Well, you know, it's really interesting because there's so much real estate data that's come out or that comes out constantly, and it's the interpretation of that data that's off. Because you know, CoreLogic, for example, puts out great data, and they'll put out the kind of the snippet of it and give their opinion. And then people will take excerpts of that data and say, oh, look, last month it was this month it's here. You know, common knowledge, you don't look at month over month data, you look at year over year data, and you look at the trends, and you look at the whole picture. So yeah, I wish they would just report the news in all aspects of the news.
Yeah, so this is a little bit of a snippet of what kind of the way that Noel thinks. So you guys are going to be in for a really good show today. But Noel, before we get into the actual podcast interview, do us a favor for the people that don't know who you are. Introduce yourself. So who you are, what you do, and how long you've been doing all that.
Sure. Noel Christopher, obviously. I work with Renters Warehouse. I'm the Senior Vice President of Portfolio Services. I've been with Renters Warehouse for about 3 years and worn a lot of different hats. When we started, Renters Warehouse had about 5,000 homes under management. We now have roughly 22,000 homes under management for 14,000 investors in 41 markets. We have a online marketplace to buy and sell investment properties. And so I've done everything from managing our mergers and acquisitions to strategic partnerships, which I still do those things. And now I'm taking a big focus on portfolio sales because I came from that background in Chicago. I worked with institutional funds. I worked with small investors and built a really, really effective process and team to help investors acquire homes, not just in Chicago, but around the country. And so now we're taking that several years later, similar process, much more technology, a much more scale. I mean, we've gone from a property management company in 41 markets to now a full investment services company in 41 markets. So we've jumped in under the radar to becoming one of the larger brokerages in the country just about overnight. And it's not overnight, but it may seem that way. And so we're still refining everything and moving forward with that, but it's something I'm very passionate about.
That's incredible. And Renters Warehouse has done some incredible things. So like I said, you guys go check out, just go search Renters Warehouse on Google or Facebook, LinkedIn, or whatever, and you'll find tons of stuff there. So speaking of content going out, Noel actually puts out a lot of content himself. A lot of it's with Renters Warehouse, but he does a lot himself as well. And I believe you're on the Forbes Real Estate Council. Is that correct? Yes. Yeah, so he does articles for the Forbes Real Estate Council along with a few people that are in the Think Realty. So, Noel, there's a new feature coming out in LinkedIn. And this is where, if you guys aren't connected with Noel on LinkedIn, you need to get connected. I don't know. Are you maxed out?
No.
Okay. Okay.
I'm starting to slow it down a little bit and ask for people to follow rather than connect.
Sure.
Start to max. They do max you out.
Sure. So you guys go follow Noel on LinkedIn. He puts out a lot of great stuff, but so he's absolutely crushing it on LinkedIn. And one of the things that dictates that is that they asked him to do some live like beta testing for LinkedIn Live, which if you guys are aware on social platforms, most social platforms have the live functionality except for LinkedIn. So Noel, kind of tell us about what you got going on in the live LinkedIn world. I know that we're recording on June 20th right now. So you're going to be actually going live here in a few hours. So tell us about what you people can expect if they follow you on there.
So it's similar to what I post on LinkedIn as it is, and it's kind of yet to be seen how the live broadcast is going to work, because what's great about LinkedIn is that it engages business to business. Mm-hmm. The type of customer that I am targeting is I don't want to say a professional investor, but a professional that is an investor. So whether it's somebody who has a full-time job and they own one property, or somebody has a full-time job and they own 10, or somebody who's now shifted over from owning 10 to owning 30, 40, 50, and it's their retirement, and they're either wanting to buy more, wanting to sell. People aren't realizing that you can actually sell a stabilized portfolio for a good price, and that we could talk about this a little bit later, where the market is right now, and it's pretty unreal right now. But so LinkedIn asked me to be a beta tester for LinkedIn Live Influencer, and going to be doing I've done one show where I did an interview with Andrew Holmes from Chicago RIA, but I'm going to start a weekly live show with LinkedIn and doing some ad hoc live shows as well. But it's going to be a show about the single family rental space. It's going to be an interview style, podcast style show. I'm going to bring in either some economists. We've got CoreLogic, got from First American Economists. I like to bring on some of these journalists who are really beating the drum about the housing crash coming, and some of them that are saying the opposite. I'm bringing some of those guys in to actually have a head-to-head conversation, and bringing in economists to really kind of level set everything. So the idea is just to really talk about the SFR industry, and then a little bit about what we're doing in our story with what we're doing in building our company, and talking about specific markets. I love to talk about Northwest Indiana. I believe a lot about it, and a lot of people don't know about it. And even bringing some of the owners of the portfolios that we're selling to give their perspective on investing, and why they grew to where it was, why they might be selling their portfolio and going in the multifamily, for example. Sometimes people get caught up in these industries and they want to live in a vacuum and only talk about their industry, but real estate investing is real estate investing. And there's a lot of different aspects you can take, and there's a lot of different points in your life that you may want to be to invest. Obviously, I'm all about single family rental investing, but I see, guys selling their portfolios they bought back in 2012 and turning that into a triple net lease Walgreens. Not a bad deal, right? And so a little bit less hands-on, a little bit lower yield, but they've realized their investment in their profit. So there's a lot of different things to talk about.
I hope you've been enjoying this Good Success podcast, and we'll be right back after a word from our sponsors. Our next sponsor is Gary Harper at Sharper Business Solutions. Your business is a personal endeavor that you have poured your blood, sweat, and tears into, and they know that. Sharper Business Solutions is a full-service solution to help you scale your dream. Sharper Business Solution implements the Sharper process and other key systems, giving you the confidence that you need to have freedom and grow and scale your business. The Sharper team wants to come right alongside you and provide the resources needed for long-term growth and success. If you are looking to grow or scale your business, contact my friend and Good Success Mastermind member, Gary Harper, and his team to help you implement the Sharper process. You can schedule your free consultation today at sharperprocess.com. So go do it right now. Go to sharperprocess.com and schedule your free consultation with Gary and his team. Our next sponsor is Jerry Padilla from Prime Lending. Whether it's your first time buying a home or you're well adversed in the process, buying and refinancing a home can be an exciting and rewarding but sometimes challenging experience. At Prime Lending, we take the time to listen and work with you to find a home loan that fits your needs. If you are looking to refinance your loan, lower your interest rate, lower your monthly payments, shorten your term, or get cash for whatever reason you need, we have a solution for you. Prime Lending also has several options for renovation loans, so you can find what works best for you and your home project. Make sure you contact our good friend, Jerry Padilla, who is a senior loan officer and originator with Prime Lending and has over 11 years in the mortgage industry. You can learn more about Jerry and what Prime Lending has to offer you by visiting goodsuccess.com/prime lending. Again, that's goodsuccess.com/prime lending. And now, back to our show.
Yeah, absolutely. So that's just one way that Noel's going to be putting out content if you guys go follow him on LinkedIn. But obviously you believe in content. You put a lot of it out there. Kind of talk about how it's helped you and the value that you've gotten out of putting content out. Maybe not just LinkedIn, but anywhere that you put content out.
So yeah, I follow Gary Vaynerchuk, and I know you guys know who he is. And he really got me thinking about how, telling your story and not having it, very produced where you're saying, today I'm going to tell you how to do this, this, and this. This is what I'm doing. This is what's on my mind. So I started, I drive my kids to school every day, and I read, I get up early and I read a lot of articles, and I kind of keep up with what's going on in the industry. And I was starting to see a lot of these articles that were just false, really. And I started turning on the camera in my car as I was driving back from dropping off my kids and giving my one take view about it. And then I would go in and add maybe some other content to it, some graphics or some data to back up what I was talking about. And it got really good traction. And it's not about being viral. And although I had a couple go viral, but it's more about getting in front of your audience that you're speaking to. And that could, for me, that could be 100 people, that could be 5 people, that could be 1,000 people. And I've learned on LinkedIn, for us, we've tried stuff on Facebook, we've tried stuff on Instagram, and we get great brand recognition, but LinkedIn is really getting to the clients we want to be in front of. So I post a video that gets 10,000 views, but I have one guy who says, hey, I didn't realize I could sell portfolios, stabilized portfolios, and I have a 100-door portfolio. Then that's great. It achieved its purpose. And it's not just about talking just about single family rental investing and things like that. It's talking about your purpose, about growth mindset, about who you are, and really, focusing on that. And that's why when you talk about purpose, Tom, and I watch all your videos and I love them and I think they're great. And it's not just about business, it's about life. And I believe in leading a purpose-driven life rather than a results-driven life, because a results-driven life is just going to continue to make you unhappy. Like you say, and Gary Vaynerchuk talks about a lot. He knows a lot of multimillionaires who are very, very sad people. And he knows a lot of people who are making $50,000 a year living within their means that are very happy. So what's your goal? What's your verbally stated goal? Things like that. So I want to try to talk more about that, but LinkedIn has been great. And it's the engagement that I get is awesome. And like I said, I don't care if only 5 people look at it or 5 people like it. If it's a right 5 people, then that's what matters.
That's right. Absolutely. Yeah. Thank you for sharing that. And I just want to repeat the quote that you said, live a purpose-driven life, not a results-driven life. I think that's incredible. And that's definitely something that kind of good success is all about in general. So yeah, thank you for sharing that. So let's talk a little bit about what's new with you, what's new with Renter's Warehouse, what you guys got going on in the works. I feel like every time that we talk to you, last time that we had you on the show, you had some updates for stuff that's going on in your world, but also Renter's Warehouse. So kind of talk about what's going on.
Sure. We've been really focusing on building a brand to service the whether it's a single investor, which is the bulk of our client base. I mean, just think about the single family rental space, about 17 million homes, about 23 million if you count 1 to 4 units, which I like to count because I consider that still single family in the investing space. The majority of them are owned by small investors. And so our client base, we have 14,000 investors that own 1 or 2 homes. We're realizing that there are some places for them to go, but there aren't a lot of places for them to go where they can sell their asset, where it can be managed, where they can get content and understand about investing. There's a lot of different angles that you can take, but going into the brokerage, which we started at the beginning of the year, but really rolled it out March 1st, was a next natural progression. And so we've spent the last 6 months hiring different caliber of agents in our markets. And, we have our leasing agents, we have our investment focus agents. We've got some agents that are really focused on larger investors, and that's kind of the team that I work on. We have some that are focused on the smaller investor. We're really seeing that in the investor space that investors that own between 25 and 200 doors, 200 homes, there really isn't a lot of place for them to go. They don't realize, many of them don't realize that you can sell your portfolio stabilized. They don't realize that there are a lot of buyers out there. There was something recently put out in Inman that was interesting because it came from CoStar. CoStar saying the single family rental space is declining. Well, I can tell you I'm in this space and you guys are in this space. I haven't seen this kind of demand since 2012. And we're at what people would call the top of the market, or at least close to the top of the market. And maybe it's leveling off or whatever. You can debate all that all you want, but we have more demand for investors who either want to go from being a small investor to being a professional investors who are looking for product or want to cash out, because a lot of people have made a lot of equity in the last 5 or 6 years. And now there's opportunities for them to cash out. There's a lot of people that want to get in, and the numbers still work. And, there's the big things that have been happening recently. Build for rent is huge. It is exploding right now. Tertiary, secondary markets are huge. The technology is where it's at. The market is where it's at, that you can truly invest outside of your geographic region, and you don't have to be in a major market. And the numbers work in these markets, and you guys know this. It's great. The capital is still inexpensive. Lending is inexpensive. You can invest and start to create wealth, and it's never too late, ever. It is never too late to do it.
Interesting. So you talked about that there's more demand than there was in 2012 with single family rentals. So is that a trend that maybe you're seeing in the single family rental space? If not, then what are some other trends that you're seeing in that space right now?
So, well, to clarify, so in 2012, it was institutional funds that were going crazy, and there was a lot of other investors that invested. I think what's happening now is it's more organized. So there's marketplaces like us, Roofstock, SVN, and there'll be others. There's more technology, more market research, more data. The investor space is becoming more organized. So we're seeing more demand. I don't know if it would be actually more than 2012, because 2012, you could just gobble up. If you could hold it for 5 years, you were on the upside most of the time. Now you're seeing investors being more sharpshooting. So you no longer, the big thing was a few years ago, we talked to a larger investor and say, okay, what's the next market that I need to create scale in? And I said this the last time I was on your podcast. I think it was, our answer was like, well, we have 41. So why don't you buy 5 homes in each market? Now that's happening. And not only in our markets and markets that we're not in, there are what I call mid-cap funds that could be anywhere from, 100 homes to a few thousand, that are buying homes that are truly market agnostic. They're chasing the yield, which is not necessarily a bad thing. They're also looking at the other market dynamics. They're looking at a lot of these secondary markets who've opened themselves up for business. They're shying away from some of the larger markets who are burdened in their pensions and too high of taxes. And I mean, I hate to name markets like that because we work in some of those markets too, but these great markets where millennials are moving to, where they're growing, where land is inexpensive. I call them kind of a low-cost market, where you have a high-rated tenant living in a low-cost house. And so that community thrives because the cost of living is lower. And so it's just great. I'm seeing it happening all over the country. And the thing is that there's always been rentals in these markets. There's always been investors in these markets, but it's becoming more institutionalized. They're becoming more professional. They're becoming more efficient in the property management world and the investment side. Everybody's becoming more efficient. So then when there's been yield compression, the efficiencies right now are outpacing the yield compression. And so therefore you're getting better returns, or just as good of returns, even with prices going up.
But Noel, what happens if my house that I buy and you guys manage for me needs repairs?
We repair it. So what happens if you buy an investment?
Noel goes to the house.
I don't know. Like these
And
are
unclogs
the
the
kind
toilet.
of questions that I get all the time.
Well,
And I'm just like,
we get these questions too.
I'm just like, yes, it costs some money to make some repairs sometimes.
Right.
Like I don't get it, but
So you have to get your car fit. You have to get your oil changed in your car. You have to maintain the house that you live in. So the concept that you don't have to maintain the house that you rent out to somebody else is a little bit insane. And I honestly many times blame what I call the facilitators sometimes that are putting people into these situations that are not setting the expectations that you're buying an investment that needs upkeep. I always hate to use the term turnkey. A turnkey investment is a Walgreens where it's a triple net lease. That's a turnkey investment. Single family rental is somewhere in between that, because you still have to make decisions. Even if you have a professional property manager, when somebody comes to us and says, you know what, I don't want to hear about this, you guys take care of everything. We're like, well, wait a second, because you're going to want to hear about what's going on in the home that you own. That's probably one of the largest investments that you have. And if you don't take care of it, it's going to be it's going to hurt you. So, those expectations. And I think what's interesting now is that there is more, if you're in the middle and you're not providing value, you're going to get pushed out. And then the industry has been going this way for a while. So no longer does a buyer need to go through somebody else to get to you guys, right?
oh, for sure.
They can go directly to you, and you can provide that value directly and actually give them value because you're not dealing with somebody in the middle. And that education is there and the knowledge is there, and you don't have to pay for real estate education. It is given away for free. There's plenty of us out here who will happily give you everything you need to know about investing and point you in the right direction to the right people who are competent to invest. And so that's where I think there's a lot of changes happening in the industry.
Well, but plus part of the education is actually doing it yourself and going
True.
through the process and understanding the bumps and things that you go through over years and years of owning real estate. But I think you brought up a good point. Like a single family rental, I think one of the biggest things, so I'm not against multifamily. I don't want to make this bashing. Right. I do think that there's definitely a place for multifamily, and I think there's a place for investing in funds, and I think there's a place for all those things. But single family investing is so much more transparent. Like, on a monthly basis what's going on. Now, sure, you do get hit with you get hit with all these bumps, but if you're investing in a multifamily syndication type of deal, like you don't hear anything that happens. The place could be burnt down and you probably wouldn't have even known about it for months and months later. But I think that's one of the things I like about single family is it's transparent. You can see every single month what's going on, and you get to get hit by all those little things all along instead of like the whole entire place like goes south.
They talk about how I totally agree 100%. And owning homes, the first 5 years are probably the hardest, right?
Right,
because
exactly.
You've got some appreciation that you're trying to catch up to. You've got some expenses. When you buy a new construction home to live in, there's things that go wrong.
Every house.
Yeah. So as long as you set your expectations and as long as you're very aware of what you're buying, because in certain markets, as yields have gotten compressed, some providers will cut corners, and you'll see issues with main sewer lines or, whatever it might be, a roof that, you still need to do all your due diligence, and you don't take what somebody writes on a piece of paper as a return as what it is. You really need to understand it. And there's, like I said, there's plenty of people who would give free information. I have people send me investments all the time that we make nothing on, that I look at and say, that looks really good. Or where'd you get that? Can you get more of these? Or you need to watch out for these 5 things. Your expenses are too low. And that's where people get caught up sometimes, is the expense ratio being, or what we call expense ratio. Their expenses that they're accounting for on a yearly basis are too low. If you're buying your first investment property and you need to live off the cash flow, it's a bad idea. You need to put that money back in, and you're going to have an asset that will be there for you in the years to come, that will help you create wealth. And that's one of the biggest things is people come in, they say, well, I didn't make my $300 this month. It's like, yeah, but you made $300 for the last 12 months. What happened to that money? Like, oh, well, night out, date nights. I don't know what it is, but anyways.
It was interesting. You said the hardest part is getting through the first 5 years. Can you kind of go into that a little bit more? Because I 100% agree with you, and I've owned rentals for 20 years, and like I can tell you, like that's how it always is. Like you kind of get through this period of time, and you're like, then you're a little bit more understanding about, okay, this month I got $3,000 going out because a tenant moved out, and I got to do this, this, and this. But like now I'm going to raise the rent $125 a month, and I'm going to get that back in spades over the next 3 or 4 years.
Yeah, well, it's you've got just the basic appreciation. So a lot of people are this is a different subject, but a lot of people are looking at appreciation what it's been the last 5 years and assuming that it's going to keep going like that. That's what got us in trouble in the first place. It's looking at that basic 3.7% appreciation nationally or what it is locally. Understanding you have that, you have rent increases, you start to build an equity. And so the numbers on a single home or on a portfolio of homes get really interesting at year 5. And it starts to compound and it starts to become an actual asset rather than something that you're just kind of managing and keeping it afloat. It really becomes a performing asset. And you also get into the flow of things as well. And how it's going to operate. And
the other thing too is that rents are not going to decrease. Like that's the one thing that you can probably say is constant. Like
unlike apartment rents.
Exactly. So like to me, like the rents are going to go up. I'm sorry. Like you might say a housing market's going to kind of do this and have ebb and flow, but the rents don't have that much ebb and flow, and they're going to continue to really go up over time. And I think that's where you, in year 5, like you're basing everything off of numbers from, day 1. Well, in year 5, the rent increase over those 5 years, I think normally ends up almost always paying for most of the repairs or anything that you might end up having to do anyways. And then at this point, you have a whole new time where you're starting out with maybe at the beginning you was $250 a month you thought you were actually making in cash flow, and now you're making $450 a month because the rents have gone up so much.
Well, and it's people get caught up in the housing market again where they're talking about appreciation slowing down and things like that. Look, the market's going to go up and down. If you're owning the investment for the long term, then if the value goes to 0, and you own it for 10 years, it goes to 0 at year 4, but at year 10, it's back up to well over, much higher number. Just think about everybody if they could have held on to a lot of their investments from 2008, because think about how much money people made since then. It's just, if you're in it for the long term, and you should be, then it's the rents, unlike multifamily, where it's multifamily, you can come into a place like Chicago, for example, and build 160,000 units coming on in the next 24 months. That is going to affect the rents in multifamily. Single family, you can't quite do that, right? So you have new construction being built. That's being gobbled up by mostly home buyers. You have some build to rent that's happening, but there's such a demand for rentals right now that you're not going to have rents go down. They may level off. They may not appreciate as quickly on a year over year basis from time to time, but they're rarely going to go down.
Right. So like, even if the rents don't continue to go up in a down market, the rent still doesn't know that the house is worth less. You continue to still get the same cash flow.
Yeah, exactly. And so that's something it's hard for people to understand sometimes.
Yeah. So I'm certain a good portion of our audience that's listening right now are either thinking about getting into the rental market and buying some single family rentals, or maybe they have a few and they're probably either at year 0 or within year 5. So let's say year 0 to year 5. I keep stumbling with my words. So between those 5 years, you mentioned that that's the most difficult time period. So what are some tips, some thoughts that you could give people that are in that time frame in order to push forward and continue on and not just give up and throw the towel in?
Well, I think it's mindset, like anything in life. Looking at not banking on that cash flow, being able to put that cash flow back into reserves for that rainy day issue that comes up, realizing it's an investment, realizing that even if you're breaking even, you're not really breaking even because you're paying down a mortgage. You have a home that's appreciating. So it's a constantly, for us, if we look at it, it's like a living, breathing asset that's always changing and moving and repositioning and leaning on professionals. And this isn't a plug for my company by any means. It is, you want to make sure that you know, your ROI is won and lost at certain points in the process when you own an investment property. One of the first ones is when a tenant has an issue and the timing of that issue to when the lease renewal is. So if you have a lease renewal coming up in 2 months and you have an issue and you're trying to save an extra couple $100 by getting the guy you call in the phone book to go out and fix it, rather than having the property manager who has a vendor who may charge more but is there on day one, that could be the difference between a rent increase. It could be the difference between whether they renew. And when you get into that renewal period, or you get into, a tenant moves out, how quickly you reposition the property, get it back on the market is everything. And then how you're marketing it is everything. I mean, the searches are based by price points. So if you market it, you can market it $20 too high and it might not even fit in people's searches and they may not see it. Or the other thing is when you want to push the rent, are you sacrificing a quality long-term tenant who's going to accept a small rent increase? Or do you think you can get somebody out and increase the rent by $100? And then could you possibly be over renting the property, getting a less qualified, higher paying tenant who in the long run is, we see it, we have the numbers. Less qualified, higher paying, they have more maintenance issues and they default more often. So there's a lot of things that you need to lean on, either be very knowledgeable yourself and be very, very hands-on, or leave it to some professionals that you can lean on in different aspects. And there's everything from full service property management professionals to there's self-service management platforms. Our biggest competitor in property management are people who self-manage. And so as there's been more rent regulation coming in as well, it's making it harder. So you can get caught up. I mean, the thing about South Holland right now that they're not accepting any more rentals for 6 months. Well, what if you bought an investment property the day before that happened?
Yikes.
We're kind of screwed. I mean, how many deals are getting backed out of right now because they can't rent them that are under contract? I mean, it can change a market doing things like that. And so you have, understanding rent control, and there's so many things to understand. But in that first years, it's really making sure you're buying I'd rather you be more conservative than go for that higher yield, higher risk asset. Be conservative, get your feet wet, and have a plan on how you want to increase it, or how you want to buy more assets. Owning 5 is one thing. Owning 10 is a whole different story in a positive way, because you're less likely to have, you can own 5 homes and have 3 tenants who are in default or that are moving out or whatever it might be. You own 10, you're less likely to have that. You're a little more diversified. And that's where the numbers also start getting more interesting.
Yeah, so I would love to tell people, like, get to 5 as fast as you can. As soon as you get to 5, then get to 10 as fast as you can. As soon as you get to 10, get to 20 as fast as you can. You have to have a large enough statistical snapshot to be able to give yourself a real ebb and flow of how this is going to work.
I think it was important to understand something that you mentioned towards the end there, is that either you need to be if you're going to get into this, either you need to be very, very knowledgeable in this, so that about like if you're in Illinois and you're investing in South Holland, like you need to know about this stuff and see that video that Andrew Holmes put up this morning, like that kind of thing. You need to be very hands-on with it, or just rely on somebody like Renter's Warehouse to keep you informed on this and kind of keep you in the loop and let you know. So
yep. And even if you're relying on somebody, you need to go in with your eyes wide open.
Right. Sure.
So, be careful of the people that are offering turnkey, high yield. You don't have to do anything, and you're not going to have a single maintenance issue for the first year. Those are like, I'm not saying it's not bad to have a maintenance warranty. It's not bad to have somebody back up their work, but rent guarantees, maintenance guarantees, things like that, they're bad for the investor because they give them bad habits, and they're actually many, many times they fail and they break companies. They break turnkey companies. They break these guys because stuff happens, and it'll I've seen it, and you guys have too. I mean, we've seen it many, many times of the turnkey guys who are trying to push and scale. I mean, we live in an environment in the world where if you didn't do more than you did last year, you're a failure. But that's not how it is in reality. This isn't the stock market.
Sure.
You don't always have to have values go up 10% every year. this is long-term investing. And so if you're in it for the long term and you go into it eyes wide open, you can be very successful.
Yeah, I was actually at a single family office convention a couple months ago, and like the guys that have been doing investing and VC capital and been doing managing people's wealth over like 3 or 4 decades. This guy got up and he basically like just laid it out. He's like, if you're expecting more than a 6 or 7% return, like you have absolutely unrealistic expectations. If you're getting it, take it. Like, take it to the bank and be happy that you got it. But like, if you're getting more than 6 or 7% in today's market environment, like you should be very happy and be like, that's what we're expecting. I mean, that's what he told. He's like, I'm telling my families, this is what we're expecting. Like, yes, we're shooting for higher. Yes, we're going for higher, but everything else is kind of like hopeful. It's not like guaranteed. It's not that it's there.
You're going to hit the lottery every once in a while.
Sure.
Right?
That's right.
There was a guy in Chicago that I used to do a ton of business with. I don't know if you guys know him. He was a home investors guy, Scott Gottlieb, and his whole philosophy during the downturn was, if it's a break-even deal, do it, because the deals that you think are going to be home runs aren't, and the deals that you think are going to be break-even can sometimes be home runs. And he was very successful with that philosophy. Not everybody can do that, but like you say, I mean, we're looking at around the country, even in secondary markets, when somebody comes to us with something and they say it's a 15% net return, we're not really interested in looking at it. That 5.5 to 8% is kind of that range. And at 8%, you're dealing with a much lower tenant type, and it depends on the market, obviously, because some markets have some really good returns right now, but solid investments. I'd be interested, Tom, what do you guys?
For us, it's kind of hard, to be honest, because like right now we're going into Gary where the properties are so much lower. So I can't even give somebody a pro forma that I'm like, I mean, I can raise the vacancy, I can raise the repairs, I can raise all these things, but we're still like showing 8 to 10 in that market. But like our normal typical market is like 7, 8, and that's kind of like giving a 5% vacancy and a 5 or 6% maintenance. So like, and to me, like, if you're getting that, I think that those are great, markets that people should be really looking at, because I think the affordability issue is a massive issue that's going to happen over the next 5 or 6 years.
What's happening now?
We don't understand, like, in a way, this world almost has too much money in it. It has too much capital in the world that we live in. But there's this massive difference between the haves and the have-nots, and I don't have no idea how we're going to deal with this, because it is going to be a massive issue. I don't think we're going to see houses that are under 200. At some point in my lifetime, there will be no houses under 200,000. It just will not. It won't even happen.
I agree 100%. And where I'm at in Colorado, I was just meeting with a really large land developer and builder, and they're leaning more into the rental space as well, because their starter homes are $549,000. So, and I talk about this online a lot. You've got people coming in with student loans. So they're coming in with $50,000 to $100,000 of debt in a student loan. Then they go get a $500,000 mortgage and they buy a $50,000 car if they're lucky. Yeah. And what that's doing to our society, time will only tell. I don't think it's necessarily bad that people rent. I think, what's interesting is we have a decent amount of our owners that we manage for that actually rent their home and they invest, because the expectation of somebody who's paying $2,500 or $3,000 a month for rent, the house they want to buy is a $6,000 a month mortgage. So they stay renting. Well, their income, they could invest. They could buy one of your houses. They can get into that. It's, the down payments aren't insane. You can do, there's a lot of things you can do to start building wealth. So now that you can own a house instead of having the bank own it and leveraging yourself to the tilt, people are leveraging themselves where they have nothing left for living in a house that they're not probably ever going to truly own. And so it's a short-term gain for long-term pain mentality that they don't even realize they're heading towards. And the affordability issue is a real, it is, that's something where I've gotten in some debates with people. They're like, well, but what about affordability? Yeah, well, affordability is an issue. It's a huge issue. And that is why there's so much opportunity in the rental space. Rents have gone up in some areas. It's unattainable in certain areas. And those, those areas I think can see some pain at some point, depending, if there's any kind of a .com crash or anything like that, you'll see some pain. But overall, you can find a place to live. It's just expectations. And people's expectations are so high on the standard of living that they want, that they're willing to sacrifice their future for it. And I think it's sad. I think that, back to the college side, the student loans, it is a serious issue, and we're putting people into our society at a huge deficit that they may never get out of. I've read some numbers recently where they're talking about the amount of people that are going to die with student loans. Yep. And it's a serious issue. And it is in my opinion, it's a corrupt marketplace of the student loans and the universities and what they're doing. I posted something on LinkedIn recently. It's like, would you rather hire an MBA student with $100,000 of student loan debt and a huge mortgage and a car payment, or somebody who was MBA caliber, who could have gone to MBA school but worked their way up and are coming to you as a more of a seasoned, they've failed, they've gone through their lumps and ups and downs, but they're not burdened with all this debt. As an employer, I would rather hire somebody that, maybe they don't have that college, the high-end college education, but they're smart. A lot of people send their kids to college for the experience. Well, what's that worth now? Yeah. Right. What's it worth?
We need to get you back on the show to talk about this stuff.
Yeah, that's a whole other topic. I'm just talking about the houses themselves.
Yes, sorry about that.
I see people all over the country, just not even understanding. Like, you go to Miami, for instance, and you've got so much Latin money just sitting there because, they'll pay $1.5 million for a 2-bedroom condo on Fisher's Island just to have their money not in Colombia. And,
right.
So there's so much capital just sitting all over this world right now that nobody wants to keep their money, but they want it in the United States. And I think it's going to create this massive onslaught of all of the bottom level houses. So any house underneath $100,000 in the whole country, if it's close to a highly populated area, I think in 20 years, they will not be 20,000 and they will not be under $200,000. I think any area that's within a highly populated area in 20 years, you can't build them anymore. You can't build a 1,400 square foot house for under $200,000.
No, you can't.
It's so I think if I'm an investor looking nationwide, that's the markets I'm looking at. I'm looking at markets right around Atlanta, right around Chicago, right around big metropolitan areas, because everybody wants to move closer. All the millennials are going to want to stay closer to the city. They don't want to go out to the country, unless you live in Texas. Although Texas is a little different when it comes to that, but. And scoop up as many of those properties as you possibly can and hold on to them for 20 or 30 years and just see what happens.
So, and that's what we're seeing. We're seeing some of the smaller, wealthier investors going after the $300,000 to $400,000 investment property with a higher end tenant, but the at scale investors are at that $100,000 to $200,000 range, and they are buying. If the yield works now, they are buying it, and it's not dumb money either. They're in it for the long term, and it's the same thing with the builders. I met with a huge builder yesterday that they're getting killed. So there's an article coming out about the housing starts, the new construction, and some commentary has been, these builders just aren't wanting to keep up. Is that a sign of the economy? I've met with a lot of these builders, very big builders. It's not a want. It is the fact that it is too expensive to build. And they can't, the market isn't there to buy those houses. It costs them too much money to build them. They cannot build affordable houses. There is so much demand for affordable houses that we've worked with a couple of companies that deals with tenants or people applying for home or for rental. And close to 50% of the survey they did of about 10,000 tenants were also looking for a home to buy. So somebody comes and wants to rent your house, they're also trying to buy a house. They just have run out of options. So again, like what you're saying, that's where the opportunity is, but it's not lack of want. There's impact fees, labor, materials. But the biggest thing I've heard from talking to several builders in the last month was impact fees. They're just getting fleeced by the municipalities, and they can't afford to build. It just isn't worth it for them.
Yep, you can. I can attest to that. I can promise you that. I think one of my construction managers is meeting with a city right now about a house or something. It's getting to the point where if you can get a house up and ready, like, buy it, because it's getting very hard to build. It's getting even very hard to rehab. It's getting worse and worse with the municipalities.
Well, and if
they're making a way bigger impact on the whole cost and time frame of everything than they can possibly even imagine.
I agree, and I think the labor market will catch up eventually and things like that. But even on the taxes, if you look at some of the south suburbs of Chicago, where the taxes have gone up 40%, and people don't even know where they're going to go when they reassess in a couple of years or next year, like, that's affecting things as well. It's a different subject, but anytime you get the municipalities come in and they're trying to control things, and it just ends up not working.
Well, thank you for being on today's show. Like, if somebody wanted to get a hold of you or wanted to maybe think about Renters Warehouse as maybe managing their portfolio, how do people get a hold of you, and what can they expect there?
So the easiest way, I'm very active on LinkedIn. They can go to search me on LinkedIn, Noel Christopher with Renters Warehouse. They can go to renterswarehouse.com. We have our investor marketplace. We have a research center. You can search any county in the country, pull up all the historical data on that county, kind of get a basic idea of how things are happening, and to really see where a lot of places, although they've gone up a lot recently, they're still not even at the peak of 2007. So go to renterswarehouse.com, look me up on LinkedIn. I'm very open to connecting and talking with people and answering questions and things like that. And then I'm going to be doing a LinkedIn live show every Thursday at 3 p.m. Eastern as well.
Awesome. Great stuff. Well, that was some great conversation, but Noel, do you have time for 2 quick questions, or do you need to go? Okay, so we need to ask these questions because we ask every single person we get on the interview. I believe we asked these last time that you're on the show,
I don't remember them.
But you probably don't remember them, right? So, Good Success, you know us very well. You've been to our Mastermind. We've hung out with you very much. You know Tom, you know myself. So when you hear that term, Good Success, so just the term, maybe not the group of people, but the term Good Success, when you hear that, what does that mean to you? What comes to mind for Good Success?
So I'll tell it this way. I went to the Mastermind. I'd love to come again. Got to just work that out. For me, it was about having people who cared, who listened, who were willing to give as much as they were willing to take. And I know you're a big proponent of that, Tom. And just having purpose-driven people who, are a group that is really there to support you, that you can feel like you can be completely open with without anybody judging you. That's just what comes to me. A lot of people ask me about your Mastermind, and I think it's great. I've been to a lot of different ones, and they're all a little bit different, and all have some different things. But the way you guys do your stuff, I really, I'm a big proponent of, for sure.
That's incredible. So that's awesome. Good to hear that. You were talking about the Mastermind, but that's just like the whole synopsis of Good Success in general. Right. So I think so. So, all right. So you got to leave the audience with one thing and one thing only, whether it's a thought, a quote, piece of advice, a book you've read that you want to share. One thing you got to leave the audience with. What would that be?
2 things, actually. Believe in living a growth mindset. And it's so important for your children, for everybody that you touch in your life. Having a growth mindset will dictate what you do. And the second thing is, if you don't verbally state your goals and tell everybody what your goal is, it's going to be really hard to get there. It's one thing to write it down and post it on your wall, but talk about it with people, and you'd be surprised how people will rally around you to try to help you achieve what you want to achieve in life.
I love it. Yeah,
I love it. Awesome. And growth is one of the Good Success's core values. And what you just said, I heard that about 7-8 years ago. And because I hadn't told anybody about my huge, gigantic goals, which are just, I think, way out there and very hard for me to achieve, of giving away $1 billion and flipping the city of Gary, Indiana. But just to verbally say that, now I've got to figure out how to make it happen, and I got to have other people ask me about it. But also, like you said, there's no way I can do those goals by myself. I've got to be able to get other people to be able to help me make that happen. Yep. And I totally agree with that. So that's awesome. Thank you for that, Noah.
It gives you, you're welcome. And causes you to have engaging conversations with people. If you have an engaging conversation with people, they become your advocate more times than none. So
I love
awesome.
that. Well, there's people that's been flocking to you for
Yes,
the
they have been.
Gary. So
Yes.
ever since you've been talking about
Gary
it.
is happening. It's,
right.
Even the steel mills, even all the jobs. I think it's all because of me. I'm just kidding.
That's awesome. Well, Noel, thank you so much for
Welcome.
taking the time to be on here. Man, what incredible conversation that's been going on. But thank you for being on. We look forward to having you back again soon.
You bet. Thank you.
All right, so that's going to do it for today's episode. We appreciate you all jumping on and joining us today. Again, make sure you subscribe to the podcast if you haven't already. Leave a 5-star review on Apple Podcasts if you're listening on there. The Good Success Mastermind coming up in August in Maryville, Indiana. Make sure you go check that out, goodsuccess.com/mastermind. Fill out the application there. And then the Community Go-Giver event just happened, but the next one is going to be coming up 2020, so make sure you guys are following us on our social platforms.
Put
to
it on
get
your
all the
calendar.
info.
June 24, 25, 26.
2020.
Got it.
So make sure you check that out. CommunityGoGiver.com
Yes.
is where you can keep the information, but follow the social platforms so you can be up to date on everything Good Success, but also the Community Go-Giver event. So that's going to do it for today's episode. We appreciate you jumping on and joining us today. Remember to be a conduit, not a bucket.
Work to have to give.
And we'll catch you all in the next one.